Hello, I'm Tim Beggins, president of Elk Trading Company. Let's talk about volatility this week in this natural gas weekly review. Natural gas prices have finally fallen down, reflecting some of the volatility we've seen in the equity markets. In fact, natural gas yesterday was the only thing in the green, basically for everything out there, including commodities. Natural gas was the sole survivor, but today it is falling back to earth, down to 391.20. 391 now, down 22.8 cents or over 5%. As you can see, prices are still uh, lower, holding here above the daily support, coming in at 386.80. We are well below the daily pivot at 410.30. And next support will be at 376.80. Above the market again, first resistance now at $4 and just 3 ticks. Let's turn to the hourly chart. As you can see, prices have now pushed down. It is low. The RSI is warning of potentially of an oversold condition, but we are still holding above that 386.80 second pivot support. We'll see if that continues to hold or if we continue to ebb lower, reflecting the increased volatility globally. So let's turn to some of that global volatility and reflection of the crude oil market. As you can see, this is the weekly chart. And for crude oil, prices have moved from as high as of 72.28 to as low of $60.81 today. This is the biggest weekly move we've seen in years for the crude oil markets, and this reflects the continued uncertainty of this global tariff war, with China retaliating this morning against U.S. Tariff increases. So, what to watch? This is very important level, as the break even for most crude oil zones in the U.S. is around $64, according to the Dallas Federal Reserve study back in 2024. Considering there might be some cost inflation, that number should be higher, closer to $65. But right now, crude oil prices are well below that, currently trading at 61.62. Why does this matter? Because we get a lot of associated gas from the Permian region, which is a crude oil basin. And if they slow that down, we're going to see lower supply for natural gas. Let's take a quick view at the weather. Current temperatures this morning, people are waking up around the Great Lakes and parts of New England, as well as the West, to cooler temperatures. And this cool outlook continues, as we noted earlier this week, for at least the next few days. The Southeast continues to hold, but places like Dallas are still well below the 90s at this point. And as you can see, it is waking up on the cool side around 56 degrees. So once Dallas hits a consecutive 2 days above 90 degrees, summer's on. And why? The temperature outlook for 8 to 14 days continues to be warm for the western half of the country, except for the far Pacific Northwest. And of course, as you can see, even Florida is a little bit below normal. All right, let's take a look at the front to back spreads and tell us what the market is thinking. This is the Jan versus the May contract, the spot contract. And as you can see, it's basically unchanged, which means that all the volatility in the global markets is still holding down natural gas from lifting higher at the moment, but the spreads are just flat, which means that once this volatility in the equity markets starts to ebb, that natural gas may start to resume its upward trend. Let's take a look at January versus October. Again, this spread is in the money, as we call it, for storage costs, which means that the market is worried that it will have a slow injection start to the season and that we'll be rushing to fill storage late in the season towards September, October, and November. And let's take a look at the weather for the drought. And it continues to expand around San Antonio, across all the way over into El Paso and parts of Arizona, New Mexico, and Nevada. We're also seeing some slight drought conditions along the eastern seaboard. This is again reflective of a neutral ENSO phase, which is normal for this time of year. We are continuing to see dry conditions across the west. Let's take a look at our stocks on the stock watch. They were down very hard yesterday with global equity markets, again down today. So looking at CNX, down $2 again today, holding above a trend line. but barely, down over 6.48%. CRK or Comstock also down $3 today, trading around $17 and a half, down 14.7%. And let's take a look at Magnolia, down $1.95 or 8.29%. Murphy Oil down $2.34 or 9.23%, and Northern Oil and Gas down 10%, $2.63. So it's been a poor week for our natural gas stock watch, and we'll look to see once the equity markets slow down and calm down, we'll see if these stocks pick back up as the natural gas futures continue to hold side and move sideways, waiting for that volatility in the markets to ebb. Right now, currently, for the May spot contract, prices are trading 389, even down 24.8 cents or almost 6%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.